Hey traders, as you know, the market ranges 70 to 80% of the time. So in this video, we're going to cover a crucial factor in the market, and that's how to trade a range and how to spot if we should be trending this day or if we should see some range-bound price action. So let's get into it. So let's start with the basic, previous day high and previous day low. Now, when we're looking for a previous day high and previous day low, it's definitely the easiest to come to the daily time frame versus trying to figure it out on, say, the hourly, 30-minute, or 4 hours. So now that we're at our daily time frame, we can mark out with our levels previous day high and previous day low. Now, if we were doing this back over here when we were trending, we would see a lot of patterns, right? We'd see a lot of similar price action in the sense that we kept breaking that previous day high and trending higher, right? So in a market condition like this on gold from Tuesday, October 15th till about even Tuesday, October 22nd, we continuously broke that previous day high and continued that trend, and very rarely did we even see that previous day low. So when I say to look for trends in a higher time frame or a daily trend, what I'm looking for is I'm looking for the same price action, I'm looking for similar price action and something to tell me, you know, we might continue, on this day we might continue, this day we might continue. Now these days had to have formed at some point, and for us as traders to recognize that, let's say on this day, I see that the past few days have been very bullish on gold. We broke structure to the upside. I can now expect another strong move higher. Now we could come to our smaller time frame analysis and try to find a supply zone, a demand zone, an order block, or some type of imbalance to enter our long positions. And that's what's great, again, with having these higher time frame analysis. So now that we have our previous day high and low, we understand how to spot good price action like that. We're then able to come down to a 1 hour or 4 hour time frame. So let's bring it down to the 4 hour, and I'm going to show you guys a trade that I took recently on gold, and that was using the same price action and strategy and concept that I'm showing you right now. So the first thing I noticed, now this was the day that I took a short on gold, and I'm going to show you the setup that I took. I believe it was about a 4-to-1, and we'll get into that later into the video. So I marked out previous day high, previous day low, but I noted that yesterday we had a very strong break to the downside, right? We didn't just break that previous day low, but we also broke the day before that as well. And as you guys know, when it comes to the market, when sellers step in, a lot of times they come in with strong momentum because they want to sweep out any recent buyers. So because of this downward momentum, this gave me the confidence to say, let me look for some shorts, let me look for some continuation. So now that I saw that on the daily time frame, I'm able to come down to, say, the 4 hour, and I see that on this strong drop, we created a supply zone off of this strong move lower. So I'm going to mark this out. This is my 4 hour supply zone. I'll mark this out as a 4 hour real quick. And now I know that there is real momentum, there's real selling pressure behind this move because it didn't just happen out of nowhere. We had some consolidation and a strong impulse move lower. So now that I had my supply zone, I had the momentum, and I saw the strength, I'm able to come see, let's look at a 1 hour time frame, right? Now again, this is the price action we had. I'm going to go to the replay system, and we're going to go to about that 8 o'clock. Now, we see our previous lows, we see that we're taking them out. Again, this gives us good confidence that the downside should have some type of continuation or some strength. So again, look at these pivot lows. They got taken out with momentum, very little pullback. So as we start to rally back higher, we do not create any demand zones on this push up. I see that we have a very large 1 hour imbalance right here, right? So this imbalance usually needs to be tested. We also have a bit of a breaker block too. So that tells me this whole area is a huge area that there might be some resistance or might be some sellers. So now that I found my larger area, I could come down to a 30-minute or even potentially a 15-minute to try to find some type of area of interest. Now, this fair value gap on the 15 was already used. Now, if I'm looking for a zone that I want to use today, which would be the next day, if it was already used, I don't want to use that zone. So what I did was I came to a bit of a higher time frame, right? So go from the 15 to the 30. I found my 30-minute imbalance, which also lines up with my 1 hour imbalance. So after I let price trade around my zone for a while, I waited for a strong break. Now I come to the 5-minute or 15-minute to place my trades, and we could bring the speed up a little bit as well. We see that at this point, we're consolidating between VWAP and our area of interest. This is our 30-minute imbalance, our 1 hour imbalance. There is no trade set up just yet, right? But we're remembering that our higher time frame was trying to break down to the downside, but we are still within that previous day's range. So we would wait for some type of break to the downside off of this imbalance. After a while, we were able to finally get that break. Now, this is where I ended up taking my trade. We had a 5-minute imbalance created right on VWAP after breaking structure to the downside. So this is where I took my short trade. And again, we did all of our time frame analysis. We started on the daily. We came down to the 4-hour, came down to the 1 hour, 30-minute, 15-minute. Now that I had the break of structure, a strong move, we had good volume. We see the volume here. Now I'm usually using Bookmap and order flow to see footprint levels, to see heavy institutional or real strong volume in the market. I don't use the volume on the bottom, but it does show us the volume per candle. So it had a strong volume candle. We had that imbalance created with VWAP for extra confirmation. We tapped into it, which was my entry, and my target was the next pivot lower. This trade was almost instantly right to my TP. If I had another TP, it would have been that previous day low, but because I recognized we're still in between previous day low and previous day highs way up here, I took this trade for what it was. I targeted that next pivot, and I understood that I don't want to be greedy and target down here. As great as a 14-to-1 risk to reward would be, this trade didn't end up working out, right? I was better off taking it to that next level, and guess what? A 4-to-1, a 5-to-1, that's still a fantastic risk to reward because we're still making way more than we're risking on that trade.